Welcome, everyone, to Introduction to Business and Accounting. Today, we are kicking off section 1.1, which is often called the language of business. Our goal today is to understand what accounting actually is and why it matters. A lot of people find this topic intimidating, but I promise you it is actually very simple once you see how the system works. Let's start with a real life scenario. Imagine you want to buy a PS5 or the new iPhone. It costs 4,000 dirhams, but you only have 2,000 dirhams in your pocket. So you take that 2,000 dirhams and borrow the remaining 2,000 dirhams from a friend. Now, if you write this down in a notebook so you don't forget who you owe, what are you actually doing? You are doing accounting. It's really that simple, tracking what you have and where the money came from. Accounting is really just a fancy word for recording the story of your money. The textbook definition can get long and boring, describing it as recording and summarizing. But I want you to think of it this way. Just like English allows us to speak to each other, accounting is the language that allows a business to talk to the world. It tells the story of how the business is doing in a way everyone can understand. Imagine watching a basketball game with no scoreboard. You wouldn't know who's winning or how much time is left. It would be chaos. In our world, accounting is the scoreboard. It tells the coach, meaning the business owner, if they are winning by making a profit. It also tells the fans, the investors, if this team is worth their time and money. So, who actually looks at the scoreboard? We divide the users into two specific teams. First, we have Team Internal. These are the people inside the house, working there every day. Then we have Team External. These are the people standing outside looking in. They don't see the daily mess, they only see the final reports we show them. Let's look at the people inside the house first. These people need specific details to make daily decisions. Owners need to know, do we have enough cash to pay the bills this week? Employees are looking at the numbers to see if their jobs are safe and if the company is stable enough to keep paying them. On the other hand, people outside the business look at the big picture. Investors are thinking, if I give you money, will I get more back? The government wants to know exactly how much profit you made so they can tax you correctly. And then there are the banks. Actually, let's do a quick activity to understand the banks. I want you to pretend you are the bank. I'm walking in to ask for a huge loan for my pizza shop. What is the number one thing you care about before giving me the money? Exactly. Can you pay me back? That is the only thing creditors really care about, your ability to repay the debt. This brings us to the most important concept in this class, the accounting equation. This is the mathematical rule that holds the entire business world together. It must always balance. The formula is assets equals liabilities plus equity. I know that sounds like jargon, so let's ditch the big words and look at a simple example. Forget big corporations for a second. Let's go back to that phone purchase. You buy a phone worth 4,000 dirhams. To pay for it, you use 2,000 dirhams of your own cash and you borrow the other 2,000 dirhams from your older brother. Now, let's see how that fits into our accounting formula. First, we have assets. This is what you have, which is the phone worth 4,000. Next, we have liabilities. This is what you owe, which is the 2,000 dirham debt to your brother. And finally, we have equity. This is what is truly yours, representing the 2,000 dirhams cash you personally put into the deal. Now, does it balance? On the left side, we have 4,000 dirhams worth of phone. On the right side, we have 2,000 dirhams of debt plus 2,000 dirhams of equity. 2,000 plus 2,000 is 4,000, so 4,000 equals 4,000. The equation balances, and the system works perfectly. Please remember this relationship. Assets are simply the stuff we have, and that stuff is paid for by only two sources, either by borrowing money, which is a liability, or by using our own money, which is equity. Let's do a quick check to see what you learned. Question 1. If a business buys a delivery truck, is that an asset or a liability? Correct, it's an asset. Question 2. If the business took a loan to buy that truck, is the loan an asset or a liability? Right, the loan is a liability. Question 3. Who cares more about taxes, the manager or the government? Yes, the government, which is an external user. Next time, we'll take the numbers we discussed today and learn how to put them into official reports called financial statements. Make sure to check the homework, and thanks for listening today.